It's official. The US GDP for Q1 fell a negative 1.6% versus 1.5%, which was the last estimate, and that is what was expected here today. So, what does this mean? Well, the US economy is slipping further and further into a recession, even worse than we ultimately thought. So this can put a lot of negative downside pressure on the markets, as well as a lot of other things we need to talk about here in this video, including in the crypto market, as well as Fed Mester. She had some very not so bullish things to say about the overall stock market. And then on top of that, we have Fed Jerome Powell that comes out and starts to speak at about 9 in the morning. So just here in a couple minutes, by the time this video is uploaded, Fed Jerome Powell will be speaking and he will be moving the market. So we got a lot to talk about in a very short amount of time. Hit that like button for me, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time, link down below in the description of this video. So on top of that, on top of US GDP falling 1.6% for Q1, Finland and Sweden invited to become NATO members. That's not going to be huge for the stock market, but if that conflict does escalate, that is going to be a very big deal. Why? Because the war in Ukraine is the single most bearish thing that is happening in the markets. The war in Ukraine, if that were to end today, the price of oil would fall 10 to 20% tomorrow. It would dramatically bring down inflationary pressures on the fuel side, on the energy side, as well as on the food side. So that is not good. I don't think the markets will look at it in that perspective, but that's the bottom line why that is bad. Now, the Fed and Fed Master, they're out of touch with reality. Okay, let's just be honest. Let's call it for what it is. Fed Masters backs 75 basis point hike in July if conditions remain the same. The Fed opted for a 75 basis point hike to its benchmark rate earlier this year, the biggest increase since 1994, with inflation running at a 40-year high. Mester, a voting member of the Federal Open Market Committee, said July's meeting will likely involve a debate among FOMC policymakers over whether to opt for 50 or 75 basis points. Now, why I say she is really just lost her marbles here and why the Fed is so disconnected from the state of the economy. Let's go ahead and read this, right? But specifically right here, she says, at the Fed, we're on a path now to bring our interest rates up to a more normal level, and then we'll probably a little bit higher into restrictive territory so that we can get inflation rates down so that we can sustain a good economy going forward, she said. And just so you guys know, the Fed doesn't raise rates to get inflation down. They raise rates to cause a recession, which pushes inflation down. The biggest driving factors of real inflation right now is the war in Ukraine. That's why I like to highlight that. And eventually, who knows, whenever the war does end, that's when you could get ultra bullish on the markets. That's where you could make a good case to say, hey, the Fed won't have to raise rates as aggressive and inflation will come down by itself. But the Fed, when they raise rates, when they're talking about going 75 basis point rate hikes, they're just trying to push the economy into a recession to slow down inflation that way. Now, quote, job one for us now is to get inflation rates under control. And I think right now that's coloring how consumers are feeling about the economy and where it's going. Mester acknowledged there is a risk of a recession as the Fed embarks on its tightening policy. However, her baseline forecast is for growth to be slower this year, below trend growth, which she puts at 2%, as the Fed tries to moderate demand and bring it closer to constrained supply. That's very much smoking hopium at this point. We're not even going to be close to 2% GDP growth this year. The Fed expects in their summary of economic projections, their dot plot, 1.8% GDP growth after they initially expected a 2.8% GDP growth for 2022. So it's slowly coming down, and they're really out of touch with reality. We will know if we're in a recession by July 28th. And I am very confident we are. And that's when you could see more downside in a substantial way in the overall stock market. Now, quote, I expect to see unemployment rates rise over the next 2 years to a little above 4% or 4.25%. And again, that's still very good labor market conditions, she said. And that's smoking on hopium too. If you're going into recession, if we're in a recession right now, the unemployment rate is going to go way higher than 4%, right? I believe the unemployment rate was almost 9% during 08-09, possibly a little bit higher than that. So they're smoking on hopium. They're really disconnected from the markets, and what essentially they're going to do is push us into a very deep recession. Now, at the same time, Terra Classic, this is Terra Luna, is up 47.5% off of very little news. Some people are getting a little bit carried away with the old Terra Luna Classic, but you do see crypto hedge fund Three Arrows Capital plunges into liquidation as the market crash takes a toll. The major cryptocurrency hedge fund Three Arrows Capital has fallen into liquidation, a person with knowledge of the matter told CNBC. Teneo Restructuring has been brought on board in the last few days to deal with the liquidation process. A slump in digital currency prices, which has seen billions of dollars wiped off the market in recent weeks, has hurt 3AC's Three Arrows Capital and expose a liquidity crisis at the company. So not so good for crypto, and crypto is down a lot because of it. Terra Luna, Terra Classic, whatever you want to call it, it looks like one of the better performing cryptos on the day. But if you look at Bitcoin, you look at Ethereum, Ethereum down 9.36% over the last 24 hours. Bitcoin down almost 5% over the last 24 hours. Now you have your stable coins, Tether and USD, number 3 and number 4 ranking for cryptos. You see a lot of people are pretty fearful in the crypto market, and they want a little bit more quote unquote safety. So there is that. I don't think that is obviously a good thing at all, but we do have a good thing specifically for AMC that was actually said today, which puts 2022 into a little bit of context for everyone. It says movies have momentum heading into the second half of 2022 if inflation doesn't spoil it. Top Gun Maverick rocketed to $1 billion at the global box office over the weekend, signaling some momentum for the domestic box office. A string of solid theatrical performance coupled with a strong slate of upcoming films has left most box office analysts optimistic, but inflation threatens to slow the rebound as moviegoers weigh rising prices, and that's not the case. I mean, people are not going to see a movie because the tickets are 50 cents or $1 more expensive. That's just a little bit more money a movie theater like AMC can put in their pockets. Obviously, you're not always going to go buy the candy, buy the drinks, buy the popcorn if you didn't have to, but you are still going to see a movie, and you're still going to indulge in those little things in life. Go get yourself a popcorn, go get yourself a slushie or a beer or whatever it is at the movies. People are not going to stop doing that. People are spending money on services, and they will continue to spend money on services. And I think it was cool that they did acknowledge that, and that's basically one of the most positive things here for AMC in the short and the midterm, because people are slowing down spending money in a lot of different segments of the economy, right, for goods, but not for services, not to go out and do things. That is not slowing down, and I don't expect that to slow down really anytime soon. And that should really help out AMC when hedge funds look at their portfolios and they say, hey, should we be short in this stock at this current moment? I think the overwhelming answer is a big fat no. Now let's take a look at the Ortex data, because we are not open for trading right now. This is firmly in pre-market territory. Currently filming this video at 8:50 a.m. Eastern Standard Time, 10 minutes before Fed Jerome Powell does come out. As you guys can see right here, Fed Chair Powell speaks at 9 a.m. This is now set for Eastern Standard Time. So you do have that, and you really don't have anything else throughout the rest of the day. So it's going to be Fed Jerome Powell that really moves the markets from here on out, and the digestion from the GDP report. Probably not going to be a good thing, probably not going to be a bullish thing, but who knows? We'll see where the markets do end up by the end of the day. Now, As far as the option activity yesterday, it was pretty bearish. The last two orders, though, that did come through were July 15th $16 calls for about $29,000, as well as a July 8th $11 call for about $112,000. So most of the orders yesterday were extremely bearish, but some calls are coming through, like this August 19th $21 call for $52,000, December 16th $22 call for $113,000. Those two calls, like I said, December 16th $10, oh, that's a $10 put. August 19th $21 call for $52,000 again. $309,000 $14 call for August 5th. So you are seeing some call activity, and I think that should help hold us up better than not. But still, you just got to keep it in mind that we're subject to what happens in the markets. Still, with AMC stock, we are not immune to what happens in the markets or data that we do get, like the GDP report or like Fed Jerome Powell and his comments coming here in just a minute. Now, you can see the cost to borrow max at 38.44%, cost to borrow average at 35.61%, cost to borrow minimum at 14.13%. So the minimum's going up a lot. Cost to borrow average went up a lot. And the cost to borrow max is really down a little bit, but in the grand scope of things, that cost of our average going up so much is very interesting, and I think that shows it all. Even when you guys can see this, look, the cost of our rates coming in for today, 29.2%. And there's like 10,000, 80,000, 65,000 shares available at times. So people definitely want a higher interest rate, cost to borrow rate. And that's probably because they're implying a bigger move than not coming here in the near term future. So I think that is exceptionally bullish, especially because there is shares available. Just people want more money to, let hedge funds lend them out, right, to sell them short. Now, the dollar amount of short shares on AMC stock is 1.44 billion. Estimated short interest of free float is 20.83%. Free float out on loan 35.05%. Shares out on loan 180.71 million. Days to cover 3.65. Cost to borrow, it says right here, 16.7. 100% share utilization. So that is really bullish in my personal opinion. If you guys have not seen, $13 is the max paying by Friday, and the option activity really bullish. 448,000, almost 450,000 calls that are currently out the money for July 15th. About 26,000 calls that are currently in the money for July 15th. This upcoming Friday turning into a pretty big expiration as well. If we can get a bullish reaction, it could be quite good. We do have 132,500 contracts that are currently out the money on the call side. About 24,000 calls that are currently in the money. Now on the put side, July 15th, 87,000 puts that are currently in the money. That can act as buying pressure as well if the price of the stock does go up and those puts do go out of the money. So that is pretty much going to be all for this video. Quick look at pre-market, and you can see AMC stock looks to be down about 1.72% at the current moment, and it's really going to come down to what Fed Jerome Powell has to say here in about 5 minutes when he does start to speak. So that is going to be all for this video. If you guys found value out of it, hit the like button and subscribe to the channel. Thank you guys for tuning in. Let me know if you guys like these early morning videos. I think it could be a cool way to start off the day. If you guys, do like that and you guys engage with the video, then I'll definitely keep doing them. So yeah, if you guys want to come trade with me live in real time, link down below in the description of this video. We will be doing lots of trading today, hopefully making some contracts free and playing a good directional move if we do get one. Make sure to get your free stock with Webull, Moomoo, and Public as well down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.